What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, my goal is to share with you the stocks that are at the top of my watch list going into the week ahead, as well as how I feel about the market conditions. And this week we are also going to be giving away a brand new set of AirPods Pro. They're unboxed, unwrapped, and I'm going to be giving them away over the next few days here. So if you're interested in learning how to win these, you have a 1 in 25 chance of winning them, and I'll talk about that in just a few minutes. But let's dive into the watch list. The first thing we're going to start with here is the NASDAQ index. And this one is really interesting because it was a pretty choppy week. We went up and down all week, and then on Friday, we had a really rough day. It was a pure sell-off on Friday, and now we are coming down to this major level of support here right around 12,500 points. We will see if that holds up. We are definitely going to test it this week, and we have a lot of exciting things coming for the NASDAQ this week. We'll talk about that pretty soon here, but let's take a look at the S&P 500. You can see it was a very similar pattern. We saw a very strong sell-off on Friday. We pretty much moved down the entire day, and it was not great. And in the Dow Jones, it was the exact same thing. We had two great days in the Dow Jones throughout the week, and then Thursday, Friday were pretty much pure sell-off. So not a great week in any of our indices, not a great week in the stock market, not a great week for most people holding a long-term portfolio. Now, here's what the price of Bitcoin looks like as well. As you can see, it's been a little bit of a choppy week as well. We started the week off great. We had a couple of days where we were selling off, and now we are just kind of hovering around this 40,000 level of support. It looks like this is a very crucial level for Bitcoin right now. You can see we've been trading, basically hovering around 40,000 for almost 2 weeks now. So it's going to be very interesting to see, does this hold and do we move higher, or does 40,000 completely break down? And if it does, that would be a very bearish sign and an indication that we're probably going to go down to at least 37.50, if not 35. Now, when we look at earnings this week, it is very exciting. This is an earnings week for us. We have all of the big tech companies reporting. We have some of the largest companies in the world reporting. We have Apple and Amazon both after the close on Thursday. We have Twitter before the market opens on Thursday. We have Facebook after the market on Wednesday, as well as PayPal. We have Microsoft and Alphabet or Google also reporting on Tuesday after the close. So we've got all the major players coming out this week with some major earnings for their Q1. So it's going to be very exciting to see what this looks like. And a lot of these companies, like if you look at Meta, you look at Apple, you look at Amazon, a lot of these companies are listed on the NASDAQ. So it's going to be, it could be a very volatile week for the NASDAQ and for the markets in general. A lot of these companies are very big and they make up a very large portion of these indices. So with earnings week coming up, there's a couple of things that you should be prepared of. Number one is we should expect some volatility. If some earnings are good, some earnings are bad, it could be a very choppy week just like what we saw last week. I am also very excited that Facebook or Meta is going to be reporting earnings because it means that we get to see what their user numbers look like. And we saw that Netflix just reported a loss of users and their stock took a hit of about 35%. Facebook was sort of in that range on the last quarter, and if it happens to them in this quarter, if their user number comes in lower than expected, I think Facebook stock is going to tumble even further. And so we're going to take a look at that chart here, but I'm really interested in that number. I think it's going to be very exciting to see. And we also have Amazon that's trading along a pretty major level of support. This is one of my larger holdings here, so I'm trying to figure out, do I wait a little longer here or do I start picking up some more shares? We're going to talk about all of that in just 1 second. All right, now let's talk about these AirPods. I got these completely free from a company called Addy Invest through their referral and affiliate program, but I already have a set of AirPods, so I don't really need these. I'm going to be giving them away to one of the next people that signs up for the link in the description down below for Addy Invest. Addy is a crowdfunding real estate platform where everyday average investors like me and you can invest into large commercial real estate projects and get exposure to commercial real estate without having to save up for the down payment and go out and buy our own projects. They're a great platform. I just invested into a hotel in Montreal and 40 townhomes out in Airdrie. I like the company. I like what they're doing. I am personally using it, and this isn't sponsored by them at all. They didn't pay me for anything. They gave me these because I've signed up enough people for it, and now I'm giving them back to the people that have signed up for it because I already have a pair. I don't need it. So if you're interested in signing up, the link for Addy is down below. You have to connect your bank account and become a member on the platform. To become a member, it costs $25, but if you use that link, you get a $25 credit. into your account, so it's completely free. And then you also get entered for the AirPods. If you're interested in that, link is down below. I like Addy, I like what they're doing. I'm personally using it and I just don't need the AirPods, so I'm giving it back to you guys. Okay, now let's dive into the stocks here. So first stock I want to focus on here is Facebook. Like I said, they have earnings coming out on Wednesday, and that user number is probably going to be the number one thing that focus on. Like if the users on the Facebook or Meta platform is declining, that is the worst sign possible for a company that all they do is monetize users. And so that is what caused this drop recently. And if it happens again, it could be a tough couple of weeks for Facebook. So that's what I'm looking for very closely here. I do think there's an opportunity to short Facebook if it drops below $180 as well. So this one is going to be top of my radar when the earnings come out. I'm probably going to be day trading it on Wednesday. We'll see how things kind of unfold. Okay, next company here is Amazon. We're going to go through kind of the big four tech companies that are reporting because I just want to give you guys kind of an update and my personal stance on them. I do not hold Facebook at the moment, but I do hold Apple, Amazon, and Google. I do not hold Microsoft either. We'll look at that in just 1 second, but I do hold some Amazon shares. And as of right now, I'm down a couple percent, but if you look at this, we're sitting on a pretty key level of support right here, and it's very interesting because we've tested this level several times, and now we are basically trading. We're trading sideways right now, and we've been trading sideways for about a year. And so if the earnings go well, I am expecting a pretty strong bounce off of this area of support. But obviously, if earnings go well, we could see it dip down a little bit further. It's going to be very interesting to see kind of how things go. But if you are looking at picking up some Amazon shares, I would do your research. And if you think it's going to be a really good report based on your research, then maybe you scoop up some shares at these levels. Honestly, I think Amazon over the long term is only going to grow. It's a fantastic company, and it's just a money printing machine, and it's going to be so difficult to compete with them in the long term. And so I really like the company. Now the next one here is Microsoft. Microsoft has been trading pretty bearishly, down from 349, now trading at 274. And this key level right here, right around 280, maybe 270 here, it has tested this level once right here back in October 2021 and about 4 times over the last few months here. And so very, very interesting levels of support in both Amazon and Microsoft. Facebook's also sitting on a key level of support going into the week ahead. And Alphabet looks like it has just broken through the key level of support. You can see right here around $2,500. We have just broke through that, and the stock is now below $2,400. And so that is not a very good sign on Friday's sell-off. Now, with all of these stocks being down, I hear a lot of people talking about averaging down, or another term for pretty much the same thing is called dollar cost averaging. And I have some pretty strong beliefs about it. These are just my personal opinions. But I think 95% of the time it's the wrong thing to do. It's a bad idea, and people average down or dollar cost average into the wrong things. If you were doing it into the S&P 500 ETF, that's a good idea. If you're doing it into a broad market index, averaging down is probably a good idea, or dollar cost averaging, whatever you want to call it. If you're doing it into a great company that has been around for a long time, that has proven profits, that is extremely, extremely well run and has an excellent balance sheet, then it's a good idea. But if it doesn't meet those requirements, you should not be averaging down. You should not be dollar cost averaging. And when you do, most of the time you're going to end up holding the bag, and it's going to be a very, very painful and emotional ride down. Maybe it comes up, maybe it comes back up and it rebounds, but your odds are not very good if it's not a great company. And for me, the great companies out there are Apple, Amazon, and Google. There's maybe 1 or 2 others. There's Berkshire Hathaway, but even Berkshire Hathaway owns 40% in Apple. And so, like, you look at all the great companies out there, and it's like, you need to compare them to these 3 and have a justifiable reason as to why whatever company you're averaging down into is a better long-term hold than Google, Apple, or Amazon. And if you can't accurately justify that, then you should not be averaging down. Now, if you want to see any of my trades or my buys and sells, definitely consider checking out my Discord chat. That is where I'm trying to build a community of traders to share their resources, share their knowledge, and share their analysis so that everybody can grow together. It's $5 per month. You can ask me anything you want. I also put out a full weekly watch list with some detailed write-ups in it. So definitely check that out if you are interested. And the last 2 companies that I want to go through are going to start with PayPal. So PayPal is really, really interesting. I see a lot of people on YouTube making videos about PayPal and how they really, really like it, but like in the last few months, we have had no indications from a technical perspective that this stock is going to do well or rebound or is going in the bullish direction. Like, we crossed below our moving averages in October of last year. It's been in a very, very strong bearish trend, and people keep scooping it up for this value play, and it's not going very well for them, and it just keeps falling. So we are at the lowest price that we have seen in basically the last kind of 2 years here, and we are now coming down to the lows of COVID. So PayPal has run up to $310, and it is now coming down to the lows of COVID that we saw in March of 2020. That is how far PayPal has fallen, when most tech companies are still up, usually at least 30 to 40%. PayPal is now back down to the lows of COVID. So very, very interesting to see. We're currently at 86. The low is 82. I expect to see some type of support kick in here. We also have earnings coming out for PayPal this week. So if earnings go extremely well, we are probably going to see a rebound there, and maybe that would be your entry point. But as of right now, I'm waiting for support to kick in here, and I'd like to see a little bit of consolidation around 80 to 85. Now, the last company here is Air Canada. This is a company that I like for the breakout. Things are looking good for Air Canada. We have very clear support established at $19. We have a bit of a kind of a trend line established for resistance right here. You can see we have consecutively lower peaks, and all I've done is just connect them with a line. And as you can see, over the last 2 days here, we are testing that line. Now, the reason that I like Air Canada is because, number one, travel is returning. People are starting to fly more. People are starting to travel more. People are not scared to go to other countries and other places anymore. And we are starting to see that because Air Canada actually just reported their first day ever with 100,000 customers in a single day. And that was the highest that we have seen since the start of COVID. So Air Canada passenger numbers are coming back. I don't know if you've tried to book flights lately, but the prices are starting to go up pretty quickly. And it's really nice to see because travel's coming back. I think there's a booming industry that we're going to see over the next 2 years. I'm really interested in Airbnb as well, watching that one closely for an opportunity. Didn't see much this week though, but it is on my radar. So also something that should be on your radar. Now, in summary, we have a big earnings week. Lots of tech companies reporting earnings this week, lots of big companies, but the market is very choppy. You saw all of our indices at the beginning of the video. Nothing is going in the bullish direction right now. You could very easily argue that we are in a bearish market right now. And I'd probably agree with you. Like, we are not doing extremely well right now, so it's something to keep in mind. If you're just planning to buy and buy and buy, I would only focus on the really great companies. And if you have a really great company, you better be able to say why it's better than Apple, Amazon, or Google, because those are kind of the top 3 in my books right now. Now, also, Facebook is reporting those user numbers. Watch that one very closely because I think we could see a really large drop in the Facebook stock if that user number is bad. If it's a good user number and it starts to go back up, might even be buying some Facebook stock. Who knows? But if that is a bad user number and it declines, it's going to be really, really rough few weeks for Facebook. And as I said right now, like, we are in a short-term bearish trend. So keep that in mind as you do your buying and your investing. And lastly, if you're interested in learning more about how to analyze these charts and look at these stocks, definitely consider checking out my Stock Market Fundamentals course. It is hosted on Skillshare. It is completely free for a trial period of either 2 weeks or 1 month when you sign up. You can take my course, anybody else's course, take as much as you want in that free trial period, and then choose to cancel your subscription or keep it, whatever you prefer. Skillshare is a great resource. I use it all the time. My course has 12,000 students in it, 400 reviews for you to read through. I promise you, it'll be the best free resource that you can find online. Those AirPods are going to be given away in the next few days. As soon as I get 6 more signups, these bad puppies are being given away. So if you want to sign up for that, check out the link down below for Addy Invest. You get a $25 credit. You do have to create an account, link your bank account, and become a member. But you can win $329 AirPods. Pretty good odds. And that's it for me. Thank you guys so much for watching till the end. We will see you guys next week, and talk to you later.